Welcome back. XRP just got its biggest win in 5 years, then the price dropped. The United States government just told the world that XRP is a real financial asset. It is now in the exact same category as gold. It is in the same category as oil. It is in the same category as Bitcoin. This is massive news. This is total legal clarity. This is what millions of holders have been waiting for, but the price did not explode. It did not go to $3. Instead, the market reacted with a massive red candle. The price dropped from $1.54 straight down to $1.38. It makes absolutely no sense on the surface. Retail investors are terrified right now. They think the bull run is over. So let's break it all down. The agency that regulates Wall Street, the SEC, officially put that in writing on March 17th. They published a joint document with the commodities regulator, the CFTC. They called XRP a digital commodity. Let me explain why this is massive. For years, the SEC tried to call XRP a security. A security is like a stock in a company. If it is a security, it falls under incredibly strict rules. Crypto exchanges would not list it. Major banks would not touch it. The asset was basically toxic for big institutions, but a commodity is completely different. A commodity is a basic good. Like corn or silver, there are no strict registration rules for commodities. By calling it a digital commodity, the government gave the green light to every bank in America. The legal cloud is completely gone. Institutions can finally build products on the ledger without fear of getting sued, and Ripple knows exactly what this means. Ripple is the software company that builds tools for the network. They just announced a massive stock buyback. They are buying back $750 million worth of shares. That is $750 million. This huge move values the company at $50 billion. That is massive confidence from the inside. Companies do not spend that kind of money if they expect the industry to collapse. They spend it when they know growth is coming. The headlines are one thing. The data tells a completely different story. Right now, everyday people are looking at the price and panicking. They see a red chart and they hit the sell button. But let me show you what is happening behind the scenes on Wall Street. And the numbers here tell a story that's impossible to ignore. Let us talk about exchange-traded funds, ETFs, basically a way for regular investors to buy XRP through their normal brokerage account. Before ETFs, buying crypto was hard for older investors. You had to open a separate crypto exchange account. You had to secure a private key. Now, it is as easy as buying a share of Apple stock. You just click buy in your retirement account. These funds have been quietly swallowing up tokens. Since they launched, they have pulled in $1 billion in net inflows. That is entirely new money entering the ecosystem. The total assets in these funds just hit $1.2 billion. One specific fund from a company called Canary holds $335 million by itself. But here is the most important part of this entire video. Goldman Sachs, the biggest investment bank on Wall Street, just filed their official paperwork. They manage trillions of dollars. For years, they laughed at cryptocurrency. They called it a bubble. Now, they are officially the largest institutional holder of XRP ETFs. They hold $153.8 million across 4 different funds. Wall Street is not trading this asset. They are accumulating it. They are buying the exact dip that retail investors are selling right now in panic. I could end the video here and you'd leave feeling great. But that's not what this channel does, and here's the uncomfortable truth the hype channels skip over. The price is still going down. Despite the regulatory win, despite Goldman Sachs jumping in, despite the massive corporate buybacks, the price of XRP is down nearly 10% this week. It is currently testing major support at $1.38. If that level breaks, things get very ugly. We could see a brutal drop all the way down to $1.05. The whales are buying, yes, but the broader market is selling hard. Let me pull back for a second. Here's what all of that means in plain English. The foundation for XRP has never been stronger in its history. The legal problems are gone. Big money is entering, but the actual day-to-day price is completely disconnected from the good news. The reason XRP isn't at $3 right now has nothing to do with Ripple, nothing to do with the SEC, and everything to do with one man in Washington. Every chart, every metric I just showed you, there's one force overriding all of it. The Federal Reserve. The Federal Reserve, the people who control interest rates in America, had a critical meeting on March 18th. They voted to keep interest rates exactly where they are. The vote was 11-1. Only one person in the room wanted to cut rates. They kept the main interest rate at a high range of 3.5 to 3.75%. Why does this matter for your portfolio? Because when interest rates stay high, borrowing money is very expensive. Big investors pull their money out of risky assets like crypto. They put it into safe assets that pay a guaranteed yield, and the Fed is terrified right now to cut those rates. Why? Because of oil. The ongoing military conflict with Iran has sent global oil prices soaring. Oil approached $120 a barrel this week. When oil goes up, everything goes up. Truck drivers pay more for diesel. Shipping companies pay more for fuel. They pass those costs directly onto you. Groceries cost more, clothes cost more. This creates a massive inflation spiral. The central bank looks at a specific inflation number called core PCE. It measures the prices everyday people pay for goods. That core PCE number rose 3.1% in January. It is supposed to be exactly 2%, so inflation is getting worse, not better. The Fed is completely trapped. They cannot cut rates until oil cools down. We have the government giving total clarity. We have Goldman Sachs buying hundreds of millions. We have massive daily inflows. All of this is real. And yet XRP is trading at $1.38. Fundamentals set the destination. Macro sets the timing. Now let me show you what the blockchain actually recorded this week. The network itself is working flawlessly. On March 19th, the ledger saw a massive spike in network activity. The on-chain burn rate jumped 313% in just 24 hours. Let me explain what a burn rate is. Every time someone sends a transaction on the network, a tiny fraction of a token is destroyed forever. It goes into a black hole. It can never be used or sold again. 2,491 tokens were permanently destroyed in a single day. That is the highest single-day burn for the entire year. Why is this important? Because of basic supply and demand. When you destroy tokens, you reduce the total supply. If demand grows but supply shrinks, the price has to go up eventually. The circulating supply is actively shrinking right now. Now, if I stopped here, you'd think this is all green lights. It's not. Now, let me show you the numbers working against all of that. The open interest in the futures market is shifting deeply bearish. Professional traders are actively betting on the price going down further, and we have massive overhead resistance to get through. The path to $2 has 3 locked doors. Here's what it takes to open each one. The first door is at $1.45. Let me explain what a resistance level actually is. It is not a magical line drawn on a chart. It is real people making real financial decisions. There are thousands of traders who bought at $1.45 months ago. They watched the price drop. They have been losing money. They are stressed out. They tell themselves they will sell as soon as they break even, so they place automatic sell orders exactly at $1.45. When the price reaches that line, a massive wall of sell orders hits the market. The price gets pushed down hard. The second door is at $1.50. This is a massive psychological barrier. Human brains love clean, round numbers. Retail investors do not set their targets at $1.47. They set them at $1.50. So there is another huge wall of supply waiting right there. The third door is at $1.60. This is the final boss for this cycle. If the asset can break and hold above $1.60, all the trapped sellers are finally exhausted. The path to $2 is wide open. But until then, we are stuck in a painful trading range. All right, you have the map. Now let me show you the 4 checkpoints. All right, let me give you the 4 dominoes. If they fall in order, you'll see it before anyone else. Signal 1, the $1.36 support level. Watch this level closely on the daily chart. If we close a full day below this level, the short-term bull case is totally dead. We will likely drop to $1.05 very fast. Signal 2, the daily ETF inflows. Watch the daily numbers from providers like 21 Shares and Bitwise. If we see 3 consecutive days of negative outflows, it means institutional buyers are finally pausing. That is a major warning sign. Signal 3, the $1.45 resistance door. We need a 4-hour candle to close completely above this exact price, and it needs to happen with heavy trading volume. Low volume breakouts are fake, and they will trap you. Signal 4, the global price of crude oil. Watch the energy markets closely. If oil breaks clearly above $120, the Fed will panic. They will stay hawkish, crypto will drop. If oil cools down, risk assets will rally hard. If these signals turn green, my target is a fast retest of the $2 level. Analysts at 21 Shares project a base case of $2.45 if this regulatory clarity translates into fast institutional adoption. But if oil spikes and the Fed stays aggressive, we could see the price bleed down to $1 for a long time. You don't need to guess, you just need to watch these signals. So let me bring this all together. The asset just received the absolute holy grail of the crypto industry: total regulatory clarity as a digital commodity from the United States government. Wall Street giants like Goldman Sachs are currently loading the boat through regulated funds, but the dark global economic picture is keeping a heavy lid on the price. The tension between the fundamentals and the macro is building every single day. I'll be covering every development, the ETF flows, the macro data, every single day on this channel. Tomorrow, we get the massive weekly outflow data from the major exchanges. I'll have the numbers, I'll have the full breakdown. Don't miss it, not if, when. And now you know what to watch for. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed,